Welcome to Market Wrap with Mo Ansari, brought to you by Compact Asset Management, providing a holistic approach to world-class wealth management. This is your source for up-to-date investment news and expert views. Market Wrap with Mo Ansari is heard nationwide on the radio and worldwide on the web. Visit marketwrapwithmo.com to learn more about the show and Mo. Email Mo at compact.com anytime. Now, here's your host, Mo Ansari.
Hello, everyone, and welcome to Market Wrap. I'm Mo Ansari, and for the next hour, I'm going to talk about the markets, what happened today on the 29th of June, 2020, what to expect tomorrow. In between, whatever you want to know, send me an email at Mo, M-O-E, at Compact, M-O-E at Compact with a K, C-O-M-P-A-K.com, and I will be more than happy to share with you my 40-plus years of trading experience. Looking at the markets, they were up today again, and when you get bad news in the market and it still goes up, watch out for that market. You've heard me say that for the last 30 years or so. The Dow was up 580 points, 2.32% on the day, 25,596. The S&P gained 1.47%, 3053. NASDAQ up 1.2%, 9874. NDX large cap technology up 1.14%, 9961. The Russell up 3.08%. At 1421, the small caps took off. Today, it was the reopening trade. Yep, everybody's saying, yep, we do have the coronavirus going up worldwide. We passed 10 million with more than 500,000 people dead. A quarter of those are here in the United States. So we are number one in the world in infections and in deaths. So that's, I don't know if something we should be proud of, but it's a terrible thing to be number one. And authorities in Florida, Texas, California, and Arizona, which have accounted for much of the rise in the U.S. cases, are now starting to impose new restrictions and retreated on reopening plans. As you heard me say 2 months ago, not now. Now I should play some of those tapes back for you. But I said, look, we need testing and tracing. If we don't and we reopen, the young people will be all out there and they will not get as sick. They will get sick, but they don't die because their immune systems are much stronger, but they will give it to their parents and grandparents. They will die, and they will get very sick, and that's the problem. But we had all these protests out there. Young people were out there. Very few had masks out there. And then we have political rallies going on. So everything, bars are open. Everybody's at a bar. And once you got to be social distancing in a bar. That's kind of hard to do after a few drinks. I think people forget about social distancing, don't they? So that goes out the window and everybody is shoulder to shoulder. And in these clubs, and the young people say, yeah, I'll get it. It'll be like the flu and I'll be okay. But now we're starting to realize, or they're starting to realize, wait a minute, some of this is permanent. There's permanent damage to your lungs that could last forever. And we don't know what those things are. So we're seeing this rally continue even with all the bad news. Boeing was up 11% today after the FAA said they would begin key flight tests for the 737 MAX. Yeah, it'll be they'll fly again. But who wants the MAX now? That's going to be the next question. With nobody flying, all these planes that all these airlines have sitting on the ground, why would they want more planes? They'll say, yeah, you can try and deliver, but we might want to deliver. Facebook also shook off some of the losses in trading. It was up today. Facebook was up even though it was up 2.11% at 220.64 on the close, even though a lot of large companies are saying, oh, no, we're not going to advertise on Facebook. Well, there's 2.6 billion people that use Facebook. If you don't want to get your message to 2.6 billion people, you can stop. And I think Facebook needs to make some changes also. They've got to stop the hate speech. They've got to stop all of the stuff. It shouldn't be a free-for-all on Facebook. They have to monitor when false information is going out, how to stop it. So that's something that they will have to work on. But Facebook's still up with all the bad news out there. That's what we saw. Treasury yields, on the other hand, were flat today, 0.636. The 30-year yield was up 1.9. The thing that worries me about these bonds is that the yield is still sitting at the low. People are saying, well, this is due to everybody's going to say, oh, this is bad because it's showing that the economy. I think the yields on the bonds are being manipulated by the Fed and all the central banks. They're pushing the yields down and keeping them in line. So I don't think much happens there. And, there's still the yield people are saying, oh, well, we're buying it because we're seeing mounting coronavirus cases, as I've said last week. Yeah, we have made a decision, even though we are going to see mounting cases, we're not going to see a lockdown this time around. States are going to, areas that are spiking, yes, they're going to shut down those areas. Bars are going to be shut down again, but people are still going to go to work. The shelter-in-place lockdown that we're seeing, that nobody come out to the house, I don't think that happens again. So there's a certain number of people are going to die. You've heard me say this statement for the last 2 months. It's a free country. People have a right to do whatever they want to do. But the problem is what they do affects everybody else around them. So, they can go out there and get sick if they want to. That's their right to do so. They don't have to wear a mask if they don't want to. But the problem is when they sneeze, they cough, or speak loudly, the droplets fly out, and anybody around them, even though they might not be sick, they might be asymptomatic, where they don't have the symptoms of the virus, but they can give the virus. And if they're young, yes, as I've said. So that's the decision that you have to make. I just think going out there and not wearing a mask is just outright rude, because it's not for you. The mask doesn't protect you, because, it just protects the other people, because when you speak or you cough or you sneeze, the droplets are stopped by the mask. So you're showing respect to people around you. That's all you're doing. And I think going out without a mask is just disrespectful to the people around you. It doesn't protect you, but if everybody wears a mask, it protects everybody. That's the thing. But we've seen the mask in Japan. We've seen Singapore. We've seen it in South Korea. The more people wear masks, the less the disease is spread. Testing and tracing. 3 months ago, I said, we've got to put that in place. They said, well, the numbers are going up because of testing. No, the percentage of people who are tested is going up. That means that the people who are getting it, the positives coming back, is going up. The percentage. So if you tested 500,000 people, percentage of people coming back positive was 2 months ago was 2%. Now it's 10%. What does that tell you? It tells you that more people are getting the virus. That's what it is. You can spin it whichever way you want to, but that's reality. And I think a lot of the states that opened up early, that said, no, we're not going to do this because this is all a hoax or whatever, now they're starting to get sick. And I said, as I said, 2 months ago, again, this for most people is a television virus. They see it on TV, but they don't know any of their friends, any of their relatives, any of the people they know directly are not impacted. When it starts to happen, that's when people really start to get worried. So wait a minute, this thing could be for real. My friend just is very sick, or my friend's father just died, or my friend's uncle just died. And when that starts to happen, that's when people are going to say, whatever somebody says. I don't care who says what. When death looks you in the face, believe me, it'll scare the heck out of anybody. I don't care who the heck you are. And that's what it is. And some people say, well, I'd rather die on my feet than wearing a mask. As you hear some people say, well, when death comes, they are going to be, believe me, they're going to be running in all different directions. Take my word for that. And I know I'm going to get a lot of emails on this where people are going to be upset with me. By the way, this evening we are going to have who do we have coming today? We do have somebody joining us, and it's always fun to have him, and that's Dr. Charles Nanar. He'll be joining us. Again, he's been very bullish. He said the Dow, when it was at 22,000, couldn't go to 5,000, but it's at when it was at 18,000, now it's at 25,000. So, it's always nice to say gloom and doom that the world is ending. And we're going to have a good discussion with him today. And I'm going to ask him what happened. It could go to 5,000, but it also could go to 35,000 in the meantime. I don't know. You just go with the market. The market has been quite on a roller coaster ride lately. So how do you invest in this kind of environment? Kim Forrest, the CIO of Bookish Capital Partners, during an interview on CNBC, she was asked for her thoughts overall on this market. And this is what Kim had to say.
Well, I think everything is all about COVID-19, and that is what the market has its eye on. And if the news is good, we go up. And if the news is not that good, we go down. And I think we're really, really keying on the things that can save people, which are things like Gilead's drug and then vaccines. So got a little good news on that today, and the market goes up.
So what would you do? I mean, do you stick with technology? Do you stick with, a lot of the, frankly, high-priced stuff that has been working and kind of points towards a kind of technologically transformed future?
I would, although, I'm kind of a thrifty gal and I like to buy things on sale. So I'm looking for companies that are not necessarily in the spotlight of Wall Street, but I am looking for companies that can add productivity. And I think that's key because that will never go out of style regardless of how else our world is changing.
That is, the world is changing, and it's changing at digital speed. That's what I would put it. We are going to a digital world. The world is going through a revolution. And on the other side, the world is not, it's not never going to be same again. The pre-pandemic, the post-pandemic economy and world will look a lot different than the pre-pandemic world. And that's what you have to be prepared for and understand that. As we approach the second quarter earnings, most will agree that the earnings are going to be all over the map. Bryce Dottie, a senior portfolio manager at SIT Investment Associates, during an interview on CNBC, he was asked if that makes it more difficult for him or if it's just par for the course. This is what Bryce had to say.
Well, I think it creates opportunity because when there's the most amount of uncertainty is when there's the most potential growth in a stock price or in a corporate bond. So on one hand, it makes it very, very difficult. It adds a lot of volatility to your investing experience, and maybe overall in your portfolio, you want to dial back the risk. But when there's maximum uncertainty, a total lack of visibility, that's when you probably should be buying. So we're firmly in the camp of buying on dips. We like the airline trade. We also like a basket of REITs, diversified amount of REITs, because, whether it's rental property or warehouse property or what, it seems like people are assuming the worst when there's no clarity at all. And so that's the time to kind of be an opportunistic investor, we think.
Yeah, Bryce was then asked how he knows he won't get burned, giving the tough road ahead for many companies that have been and continue to be hit hard by COVID-19. And this is what Bryce had to say about that.
Well, we think there's a huge amount of pent-up demand. You saw the housing data this morning look good. We think consumers are chomping at the bit to spend. I think, your observation about what's going on at the malls is there. So all of that does lend us a little bit of comfort that we won't get burned. You could, and there will be areas where you do. You have to have a little bit of the law of large numbers on your side, knowing that you're going to have a lot more winners than losers. But we still are thinking that, there's just a huge amount of savings that has been retained by consumers, and they're itching to spend it. So I don't know if there's going to be a big surge in economic activity in the fourth quarter of this year or the first quarter of next year, but it's coming. So you're going to take some hits along the way. I always think of it as hitting some air pockets on the stock market. But when you look out 6-9 months, I think it's going to be pretty positive.
Yeah, I think it is. As I've said, you have to look a year or two out, but can you handle the year or two out in between? How much money are you willing to lose in the meantime? And that's where the asset allocation comes in. Give me a call. We'll figure out the right degree of risk that you can handle. So if the markets do, we go into another lockdown, what happens to your portfolio? That's what you need to really figure out. Everybody's a genius in a bull market is how you handle the bear markets. Give us a call. We'll show you what we did, how we do it, and how we give you, look, you can try our services for a year. If you're not happy for any reason, we give you all of our fees back. Ask your broker if they will do that for you. Give you a satisfaction guarantee. Ask your new broker if they're going to do that. If not, give us a call or go to compact.com and make an appointment. Stay tuned. I'm going to take a short break, and I will be right back.
There's a time to be fearful and a time to be calm. A time to be aggressive and a time to be conservative, especially when it comes to investing. You've heard the phrase, to everything there is a season and a time to every purpose.
Hello, I'm Mo Ansari, president of Compact Asset Management. At Compact, we strive to provide you with the tools and experience it takes to be in the right place at the right time to grow and protect your hard-earned money. Call pound 250 on the cell phone and say, talk to Mo, and let's check your goals together. You'll get a free portfolio review and risk analysis, and we'll focus on your investment strategies. Call pound 250 on your cell phone and say, talk to Mo, or visit us online at compact.com. That's COMPAK.com.
Compact Asset Management is a registered investment advisor, funds custodian, Fidelity Institutional Wealth Services, member FINRA, SIPC.
Make your reservation now for Mo Ansari's free nationwide webinar on Wednesday, July 15th. He'll discuss next steps for the economy and markets as the world begins to reopen and focus turns to the U.S. election. He'll also cover technical analysis and the market trajectory going forward, plus a look at risk tolerance and how to determine if it matches your current portfolio. That's Wednesday, July 15th for the free nationwide webinar. Register online at compact.com. That's COMPAK.com.
Welcome back, everyone, to Market Wrap. I'm Mo Ansari talking about the markets, what happened today, what to expect tomorrow. S&P up nearly 1.5% today. Great day on the upside, up 1.47%. Industrials were the leader today. They were the best sector, up 3.19. Second best communication services, up 2.05. And materials were up 1.91. Worst sectors, healthcare, only up 0.85. Financials up 0.99. And technology up 1.11. Those are the three worst sectors today. Here's an email. It says, hi, Mo. Thanks for your daily market insight. I listen to you on 12:20 a.m. KDOW, the business leader for the Bay Area. I wanted to ask you if it's a good time to buy Fastly, FSLY, or is it too hot, or should be and too hot of be touched. That's Naresh. Naresh, let's take a look at Fastly. It's one of those stocks that has really taken off. It is what I call a flag formation. That's what it is. It broke out above a big range. It was between about $30 and about $10, $12. Today it's at $78. Big down day today, down about 10%. 9.66% today. I think you'll get a shot at somewhere around 72 to 62 in that window. This seems like a third wave. Or it might just go back and forth, and it's gone straight up. That's the flagpole. Now we are going to make the flag, which is a back and forth. But if you can buy it at the bottom of the range, this is one of those computer stocks that I think are going to do well over the long period of time. So I don't think it's too late. But by the pullback, it closes 78 today, low was 60s, 76 and a quarter, low 70s. If you want to buy, this is one of those that has gone up like a rocket ship, could come down. You have to be able to handle the volatility. And if you buy it, you'll have to put a stop somewhere between 43. That's the 50-day moving average. You can move that up as the moving average comes up, but that's what I would look at. Gold today ended higher, but silver down as investors eye the impact of the COVID-19's rapid spread. But people are looking and saying, okay, we better buy some gold as a safety measure. And as people are saying, if the economy slowed down, we are going to see the central banks come in and push in more money. And if they do push in more money, that's always bullish for gold. That's the way they're looking at it right now. We'll see. And again, at some point, in the short term, I think, yes, that's exactly what the central banks are going to do. They're going to continue to push money in gold, only up 90 cents or 0.05%, 1781.20 on the close today. Oil prices ended higher as hopes for increased demand overshadow everybody worried about the coronavirus-induced uncertainty. We are seeing that one of the biggest things that we saw, U.S. production is down, and it is down big. But one thing we saw that 73% of the rigs are shut down here in the United States. But production last week was up 500,000 barrels a day. That's what the EIA said. That's the Energy Information Administration. And people think that the U.S. producers could come right back to the market if we do see some prices stay around $40 or between 40 and 50. I think it'll be hard for the market energy to stay here. But as long as we don't have a complete lockdown, spikes are happening, which will continue to happen. People will continue to die. But that is the decision we've made as a society, that is acceptable for a certain number of deaths. It's livelihood over lives. That's really the decision that has been made. And now you have to protect yourself. If you're not, you're listening to the stuff that is telling you it's just flu. Well, everybody in Brazil thought that, and the president there went out and said that, and they are just falling off like flies over there in Brazil. So let me go to another break. When I come back, we'll be joined by Dr. Charles Nanar. We're going to talk about his cycle research. What is that telling us? If you need help with your portfolio, go to compact.com, make an appointment. I will review your portfolio. I will give you a roadmap. All of that is free. But it's not going to happen unless you go to the website, compact.com, and make an appointment. It's not going to happen by itself. You have to do it. COMPAK.com, COMPAK.com. Stay tuned. I'm going to take a short break, and I will be right back with Dr. Nanar.
If you're worried about your investments, you're not alone. These are challenging times, but it's not time to panic. It's time to act.
Hello, I'm Mo Ansari, founder and president of Compact Asset Management. With over 40 years of experience in the financial markets, I've seen what panic, indecision, and bad advice can do to investments. When markets are up, and especially when they're down, it is important to be decisive yet balanced. That's our approach at Compact Asset Management. Call my office today at pound 250 and say, talk to Mo. We will discuss a proactive, balanced approach to your portfolio that can help safeguard your investments and keep you on track with your financial goals. Call pound 250 on your cell phone and say, talk to Mo, and let's create a strategy for your investments today. Again, from your cell phone, call pound 250 and say, talk to Mo.
Compact Asset Management is a registered investment advisor, funds custodian, Fidelity Institutional Wealth Services, member FINRA, SIPC.
Financial news and information you can trust. This is Market Wrap with Mo Ansari.
Now let's go across the pond. And when we go across the pond, usually we go to London, England, or somewhere in the United Kingdom. No, we are going to go to Amsterdam. It's always fun. And that's where is Dr. Charles Nanar. He's president and founder of Charles Nanar Research Center. Dr. Nanar has more than 30 years of experience, including 10 years with Goldman Sachs. He's provided independent market research to entities all over the world, hedge funds, banks, brokerage firms, family offices, and individual clients. Mr. Nanar initiated a system of patent forecasting and securities analysis and developed a computer program which takes many indicators into account, including the use of proprietary cycle analysis. Dr. Nanar, welcome back to Market Wrap.
Thank you. Thank you.
Well, I was looking at your update this morning, and you wrote that the outlook has changed a little. What is your current outlook for the stock market?
Well, I don't think it's changed a little. My levels changed a little.
Okay.
That means it's where we get sell signals.
Yeah.
But that was minimal. There was maybe 0.5% or so.
Okay. So you're looking for a rally now in the market. Last time we talked, the market was, I think, 18,000. You said it could go down to 5,000. Are you still holding that 5,000 Dow number as the eventual low in the market?
Yes, that's the target that came up already years ago.
Okay. And where do you think, when do you think that's going to happen?
That will be like the second half of 2021 or the beginning of 2022.
Okay, so what happens between now and then? Do we rally from here, go up to 30,000 again for the Dow, and then come back down, or what do you think happens?
No, we had two situations. We totally went out of stocks. That was just before the top,
Right.
And then we had to bounce. And then last week we went totally out of stocks again.
Okay.
And we went long the VIX because, according to cycles, most of the bounce is over.
Mm-hmm.
So the risk is high again.
So do you think we can come back down again? Do you think we come back down to the lows that we made in March? Or do you think it's we're going to find some support maybe at 2,900 S&P, 2,700 S&P? Or do you think we all the way go down to 2,300, 2,200?
Well, at least, because if you look, and I send it out to clients, what happened in 1929 or what happened in 1973, 74, I'm talking about the big crash markets, 87, 2000, 2007, 8, it all does the same thing. So you get a big crash down, then people start buying it because they think there's a good opportunity, and then in waves it goes down until you get totally to a lower level. It's interesting because when we were right at the high and about, I don't remember, almost 3,400 on S&P, I asked people, why are you bullish? Why do you think the market goes up? There was actually nobody who had the reason. The only thing is, how do we make some money? We don't get anything in the bank. Right. And now I asked them, why are you bullish? And I don't get an answer. What a lot of people are saying to me, Dr. Nanar, is, look, we've got the central banks here. They're going to come in and put in a lot of money. We've got the federal government here. They can put in trillions of dollars. They did that in 2008 and 9, and that saved the day. Why can't they come in and put in a few more $1 trillion if we need to? And we've got the Fed put, and we've got the federal government put. First of all, it didn't save the day. They did it, and the market came down strongly after the first crash and the bounce into the low of 2009. The same thing happened in 2000. I remember then being in Goldman Sachs, I did an overlay, and I showed them what happened in 1929, that they lowered interest rates all the time, and the market continued down. People don't seem to know the history. So this has nothing to do with supporting the market. It's not going to help.
You think the Fed will not be able to save the day, and the federal government will not be able to save the day, and the market will disregard these trillions of dollars that not only the U.S. but everybody in the world is putting in?
Well, you know that there are different schools of thought, right? Not everybody agrees with that. But I give you two ideas.
Okay.
First of all, a lot of companies suddenly are short in cash. Gap, that is doing a great business, had to close stores and negotiate because the rent was too high, right?
Right.
Now, how is that possible if you have a huge business that after a couple of weeks of slowdown has no cash? Well, they have no cash because interest rates are low. So what happens when interest rates are low? They decide that, why do we pay dividend? Let's buy back our own stock. So they took loans from the bank and they bought their own stock. And then the stock came down and they didn't have any cash. The other thing is, I just give you an example, is that I look here, for instance, at pension funds in Europe.
Right.
They have bonds, they give 0% if they're not even negative. And the pension funds have to be for 70% into bonds. But they give 0% already for a long time. Right. So this cannot end well. It's very simple. But people have no idea how these things function. So it's the media who say that the Fed supports it. If it will be so easy, then we will never have a financial problem anymore, right? Because the Fed can just always give trillions and billions, I don't even know how you call it, of cash in the market. And for the rest of the eternity, we're okay. Is that what they mean? The problem is that the S&P projection of the earnings is totally collapsing and the market's going up. That has never been there before. And it's done by people who have no idea how to estimate what the value of a market is. And people who know something, I mean, I did some work with Leon Cooperman, who's a famous guy, or Buffett, and they say, people should not do it because they're going to lose everything they have. But as usually, nobody listens. And the same thing happened in 1929 after the crash. Things already looked very bad, but people say, I can buy it cheaper, so I'm going to buy it cheaper.
Yeah, this time around, we're seeing the individuals are buying, but not the big money managers. The big money is out of the market. It's the individuals, and they're saying, hey, look, we're so smart. This time around, we went in and we bought the market, and look, it's gone back up. I'm buying airlines, I'm buying cruise ships, and I'm buying all of this stuff that has been beaten up. And as soon as everything opens up, and that's what, even Larry Kudlow, the chief economic advisor to the president, I'm sure you saw him on CNBC. He was out saying, hey, we've got a V-shaped bottom here, and we're going to go straight up from here because everybody has been saving money. They haven't been able to spend, and now they've got money, and they'll come out as soon as they get an opportunity to spend.
Well, I tell you a secret. I've been saying that years and years ago. I was often on CNBC, and I met Kudlow. I couldn't even talk him. The guy is brain dead. Sorry to say. He just has slogans. He has no idea about anything. And what he wanted to say, you want these people to say, I think we're going in a big depression. They're always going to say it's going to be okay, because otherwise they would be accused of creating the depression. So everybody's just lying. And they say things are great. I just want you to take a look, of people that listen to us, take a look. After the crash in 1929, the market will always go up. Everything is healthy. It's always the same story.
We're talking to Dr. Charles Nanar, who's joining us from Amsterdam's Netherlands. He's the president and founder of the Charles Nanar Research Center. I'm playing devil's advocate here because I look at his cycles. I have to admit I'm a fan, just like I do a lot of Elliott wave work, but I'm just playing devil's advocate here because I want to find out what's thinking and why. Dr. Nanar, there's a lot of fear in the market right now between COVID, the election, earnings, and all of that. But what about, one thing that people have not been talking about is war. You do some work on the war cycle. Tell all the listeners about that, and how does that work?
Well, I do the cycle work, so the theory is things don't move at random. Right. So that's why in my work I can tell you when the top is coming and when the bottom is coming. And actually, we have this nice conversation, but I don't deal with why it happens. For instance, when the market went up, the pundit says, well, there might be a black swan theory. Well, the black swan theory is a book that was written by a gentleman that I always forget his name. That actually says that there could be an event that we cannot predict. Well, maybe he cannot predict, and then because he cannot predict it, it's unpredictable.
Right.
I'm a medical doctor and I study psychiatry also. And a professor used to say that if you say a patient is crazy, then you never understand him. And if you say I don't understand him, then you start thinking, what's wrong with him? So if you say that there is an absolute idea of a black swan, that something will happen that nobody understands, you introduce something that's just based on your shortcomings. So even if that's true, then I've been writing, okay, let's say it is there, but I'm not interested to join the group what the black swan event is. I just want to know when it's going to be. And that we got exactly right. I didn't know there would be a virus situation, but that's what came afterwards. So these things happen at certain price levels and at certain cycle tops and bottoms, and they're totally predictable, not only on stock markets, on currencies, on interest rates, gold, silver, whatever is going on.
Let's talk a little bit about the short-term cycle. Right now, you think we are going to go up again a little bit and then come back down. Is that the way you're looking at the cycle right now?
That's correct.
That's the way. Another wave high on the Elliott wave. People are calling it. This is the fourth wave, and then we get a fifth wave, and that's it. And then we go down. What about the election cycle? Do you look at that at all? You didn't mention the war cycle. You didn't say anything about that, but you do some work on war. Just on a cycle that goes through. Yeah,
there's an interesting country which I don't want to mention by name. I used to work with the president that saw me once on Fox, and I did work on war cycles going back to the Mandarin Empire 3,000 years ago in China.
Right.
And then the computer spits out when the next war is going to be. And I also mentioned for many years that the most important thing is now internal war. That is the 60 years of social unrest, like we had the 60s. Now you see what's going on in the United States. That's the second thing. And then I mentioned the Kondratyev cycle, who says every so many years, 60, 70 years, a new place in the world is going to be the leader. So Europe is already down, and the leadership is now Singapore, India, China, Australia over there. And so United States had to go down. And I'm just amazed how fast they bring the United States down. I just was going over with my family over what George Orwell wrote in his book about 1984, where he writes is that they talk about the thought police. That means is you allow to think certain things and certain things not, and they do it by taking out certain words that have to disappear, because certain words go together with certain emotions, and if the words are not there, the emotions are not there. And also what he writes about, maybe interesting for your listeners to get the book, is that they will make disappear everything that has to be with history. So people cannot compare anything, so you can tell them whatever you want. Exactly what's going on. The statues are being destroyed. You're not allowed to say this. You're not allowed to say that. You're not allowed to think this. You're not allowed to think that. So everything goes totally according to plan in the destruction of the United States. It just happens faster than I thought it would. But this is all the Kondratyev cycle, because the United States has to go under, and the East has to be the leading continent for many years to come.
So the power is shifting from the West to the East.
Correct.
It's the clash of civilizations. There's a great book about that too. So that's it's interesting how you're looking at it, folks. Dr. Nanar, we can talk for hours. It's always fascinating to talk to you. I know it's very late in Amsterdam right now. Thank you so much for staying up with late for us and sharing your thoughts with us. We always appreciate your input. Everybody, folks, go to charlesnanar.com. That's charlesnanar.com. And, look at the research. Don't close your mind. Look, it's always good to get all different opinions and then make up your own mind.
You can sign up for a free trial for a while, and then you can check it out yourself. It's a different way of thinking, and then you have to close your mind from all of what the media say and just go according to our mathematical models and see how it functions. It does very well.
Dr. Nanar, as always, it's a pleasure. Thank you so much for taking the time to be with us today. Everyone stay right there, charlesnanar.com. You can get a free trial there. Try it out, courtesy of Dr. Nanar, or you can just come to us and we'll direct you there. If you want help with your portfolio, give us a call. We'll be more than happy to give you some guidance. Stay tuned. I'm going to take a short break, and we'll be right back.
What if I told you there's a wealth management firm that offers a 100% satisfaction guarantee? Think it doesn't exist? Think again.
Hi, I'm Mo Ansari, president of Compact Asset Management. When you start a new relationship with Compact, we'll create your customized investment portfolio and financial plan dedicated to help you reach your goals. Try us out for a year. If you're not happy for any reason, you'll get all of the management and maintenance fee that you paid refunded. This is our 100% satisfaction guarantee.
Dial pound 250 on your cell phone and use the keyword Talk to Mo to find out more. Again, from your cell phone, dial pound 250, keyword Talk to Mo. Satisfaction guarantee doesn't apply to fees and commissions charged by third parties for such things as insurance products or mutual fund redemptions. It also doesn't apply to any market losses which might occur in an account. For additional information regarding this guarantee, please see the disclosure brochure available at the time you enroll or upon request.
Compact Asset Management is a registered investment advisor. Funds custodian, Fidelity Institutional Wealth Services, member FINRA SIPC.
Don't let the confusion of a 401k drive you crazy. To understand all the options and make sure you're properly diversified, go to compact.com and schedule a free analysis of your 401k. You work hard for your money. Be sure it's working hard for you. For a free analysis of your 401k, visit compact.com. That's COMPAK.com.
Welcome back, everyone, to Market Wrap. I'm Mo Ansari, talking about the markets, what happened today, what to expect tomorrow. It's always interesting to talk to Charles. Most of the time he's very bearish. I've studied the Kondratyev theory that he was talking about, the cycle, the long-term cycle is a 70-year cycle. Everybody says 70 years up and then 70 years down. People talked about this cycle in the early 90s, 30 years ago, how it had peaked. Again, the thing that I have, a thing that I always look at is if you want to bet on the end of the United States, you want to bet on the end of the world, the problem is it might not end. And if it doesn't end and you need the money in the meantime, your life doesn't end prior to that, you need the money before that. So betting on the black swan event or betting on the one outside that could happen, the probabilities of that you have to really think about and look at. But we could see, as I've said, between here and November, you're going to see a lot of volatility, and your portfolio has got to be prepared to handle the volatility. But on the other hand, 75% of the time being in all cash, if you stayed out for a year, looking at the last 70 years of history in the market, you would have been wrong. 75% of the time, last 40 years, the market has closed higher than where it started the year, 75% of the time. So, yeah, there will be air pockets. There will be volatility. That's why we look at your risk number. That is why I sit down with you and show you within a 95% probability the way you're invested, what is the best and worst case. And then you have to have that built in. You say, yes, I can handle this much. No, I can't handle that much. You can look at all the bright stuff, but you also have got to look at, as I always say, everybody's a genius in the bull market. That's why I've been emphasizing to you, now is the time for you to make sure you have the right degree of risk. If not, and the market, something happens, the market goes down to where it was in March 23rd and stays there for a year or two, you're done. You're done. You've lost 50, 60% of your money. You didn't have the right allocation. You have a big problem. If your broker didn't do anything in the last decline, that should be a big red flag for you. Or if they overdid it, they took you out of the market and then then you're sitting there, they took you out and market rallied back, and now they put you back in a week ago. Now you're behind again. Not only did you lose on the first decline, now you're going to lose again on the second decline. So you're going to get double the beating instead of just a single beating that some people took who just sold out and they said, I'll never get back in again. That's why if you want to be a proactive, all the people who get in and out, they're all done. There are very few proactive managers that have been held up in this decline, and they got out or reduced their risk and then increased their risk. Find out how we did it. I talked about 2000. You saw me do this in 2000, 2003. You saw us how we handled the risk in 2008 and 9. Now here we are again, 20 years later. You've heard me for the last 30 years talk about the market. How many people have you heard who've come and gone on the radio or other? If you want help, do it now, and I will be more than happy to do it for you. Let's go to the chart, see what the markets are doing. Go to compact.com. We got below the 50-day moving average, got close to the 50-day, which is 29.83, got below the 200-day, which is 30.21. We got to 29.99 today, pop right back up, closing at the highs of the day or just off the highs of the day at 30.53. We need to get above and go up to 31.81. That's where the gap gets filled from the middle of this month. I don't want to see this market close below 29.65 or even 29.83. If it does, that'll get me a little bit concerned. I'll start looking at 2,900 to about 28.65 is the next support. I gave you the resistance numbers. Critical, we've got a triple top at 31.50. That's what I'm looking at on the upside. And this is the fourth wave. We'll go back and forth before we get this resolved. I think we've got one more rally left in this, and then we make a fifth wave top, and you've seen that. And I'll show these charts to you when I do the next webinar on July the 15th. Again, if you want to help with your portfolio, NASDAQ, not as positive today, but coming back above the 20-day moving average, which is 98.74. I think support still about 9,500, and then some more support around 9,400. 93.22 is the 50-day, but moving averages do not work as well on the on the NASDAQ. Remember that, as they do on the Dow and the S&P. Crude oil up today. And we've had bad news. Coronavirus is spreading. We are seeing more cities not locking down, but closing bars and restaurants. But I hope we figure out a way that we can isolate and people start doing social distancing and wearing the mask. If not, this thing is going to spread. It's just a matter of time. And if it does, I've said this last week, there's a 20-25% probability we can go for a complete lockdown. And if we go into a complete lockdown again, the market will not be able to handle that. We'll go into another tantrum, and we'll need another trillions of dollars from the Fed and the federal government to come in to prop us back up. I don't know, but get the right risk number. Do it now. Give us a call. You can go to you can dial pound 250 on the cell phone and say the phrase "Talk to Mo." Pound 250, talk to Mo, and say, "Look, I would like somebody to review my portfolio." We'll get back to you. We'll get the information. We'll put it into our systems. We'll show you your risk number, how much risk you have, the way you invested right now, how much risk you should have. We'll do all of that for you free, just to make sure that you're on the right path. If you want our help, you want us to manage it for you, do a financial plan, give us a call. Pound 250 on the cell phone, talk to Mo, and just say, "Look, I would like to make an appointment." If you want to just go to our website, go to compact.com, COMPAK.com, COMPAK.com, and I will be more than happy. We can set that up on there. So either way, you can go to compact.com or dial pound 250 and say, "Talk to Mo." That's all the time that I have today. Thank you so much for spending this hour with me. Again, I bring you all different kinds of points of view. We're going to have Dr. Ron Paul is going to join us. He's the father of Rand Paul, who's a senator from, I believe it's Kentucky, Kentucky, I believe, yes. And then on Wednesday, we'll have John Bolton on the broadcast. So I know a lot of emails already. It's going to be interesting. Tune in, find out, get all different opinions before you make your own mind up. Or give us a call. That's all the time that I have today. I will be back tomorrow. Until then, good trade.
Mo Ansari's opinions about specific investments are not investment advice or recommendations to any individual listener. Mo's opinions are not based on the specific financial situation of any investor, so they may be unsuitable for some investors. Compact Asset Management and its clients may own some of the investments callers ask about. Therefore, Mo may have an interest in giving a favorable or unfavorable opinion of the investment. Because of time limits, individual investments owned by Compact and its clients cannot be specifically identified. The information on Market Wrap does not constitute a solicitation of the sale or purchase of securities. You should consult a professional financial advisor before executing a security trade or taking any other action based on information contained in this program. Customer Funds Custodian Fidelity Institutional Wealth Services, Compact Asset 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 Custodian Fidelity Institutional